Hey guys, welcome to Raja Makes Money and welcome all my money makers. And hey, if it's your first time watching, make sure to click that subscribe button and click the notification bell if you're watching me on YouTube. And if you're watching me on Facebook, click the follow button and that little thumb up like button, because if you don't have your notifications on, you're not going to know when we are live talking about the markets. But I've had so many people asking about GameStop and how to play this, what's happening, how did it go? And it is just crazy. And I'm going to try and explain what took place, how it all happened, and probably how it's going to turn out and how it's going to play out, because these are important things that you need to know with a really volatile stock that isn't trading off of any fundamentals. Forever, for all these years, the stock market has always, for the most part, traded off of fundamentals. Fundamentals, for those of you who don't know what those are, that's basically common sense. If you want to make an investment, you want to make a smart investment, and you go off of fundamentals, which is based on the company's performance, portfolio, stock, predictions, future-looking revenue, future performance, and stuff like that. Well, if you look at GameStop, it's very bleak. They've had a lot of store closures in the last year. People can buy all their games online, automatically downloadable, basically avoiding GameStop. So outside of the used, the used gaming market, or people, and even like my kids, I said when they got the new PlayStation 5, I said, hey guys, why don't you go to GameStop and get your games, or go to Walmart, anywhere, Best Buy, where they sell games. So if you don't like the game, you can return it and maybe get $20, $30 of a $60 game. And you know what they said, Dad? Nah, we'll just download it right here. And so one is it's going, and that was GameStop's whole business model. And it was a genius, terrific, great model, just like Blockbuster was 30, 40 years ago, renting DVDs before everything came along. And then Redbox came along with 99-cent DVD rentals from a vending machine. Well, things change and you have to evolve. GameStop has tried to evolve by buying cell phones, by buying different things. But the truth of it is, they're in a never-ending business model that what are they going to do with brick and mortar retail? They're not going to make an electric vehicle, which would skyrocket their stock. They really are in just a business that is, no matter what, going to keep declining. So, yes, they're going to have little pockets of upticks where they have like the new PlayStation 5s and the new Xboxes come out. But we'll talk about that. And that's a big problem, because those profits really, while those profits are great if they can get the models, the problem is, can they get them? Are they sold out? Have they been sold out for over a month since before Christmas? And that is where the big profits are, because when you sell a person a $500 item, you're probably making a 20, 30% margin or more. But minimum 20%. So if they had 10,000 units to sell at $100 profit, they can make some money. But you're also talking about, these stores were each getting 5 or 10 units. Well, 5 or 10 PlayStations, that you're making $100 off of for the whole month, that is not going to pay for a brick and mortar store to stay open. So they're just in a free falling business. And fortunately for them, with the stock going up, hopefully a lot of shareholders and internals at GameStop sold stock. But we'll talk about how this all unfolded, and let's get into it. Thank you guys for joining me for this special Saturday broadcast about how it all went down. So let me pull up my monitor. Let's look at GameStop first. So here's the stock, $325 is where it closed at. After hours, it dropped to $312. But that really doesn't mean anything after hour. After hours only means anything if you're buying and selling or flipping stock. It really doesn't affect shorts or anything like that until the market opens the next day. After hours, you don't get margin calls. You don't have volatility shutdowns after hours. It's amazing. After hours, a stock could trade 10 times what it traded during the day, and it doesn't get halted, for volatility. During the day, it could trade 1 million shares really quickly and get halted for volatility. But if we look at the GameStop and we look at the fundamentals of it, you have a stock that was basically $12 a share, 15, 16. I would tell you, if I was a person doing analytics and doing a research report on GameStop, it has a lot of support at $15 to $20 a share. Definitely at $15 a share, I think there's a lot of support for this. At $20 a share, iffy. At $100 a share, no. And if you look at the GameStop earnings, and this is what is very important, GameStop is losing money. They are losing, per share of stock, they are negative $4.18. So basically what that means is their cash burn is just through the roof. So obviously they have probably had to go out and raise capital several times because, they're just bleeding money. They're negative 77 times earnings. So most companies trade at a multiple of usually around 30 to 40 times earnings. So if a company made $1 million, their stock price would reflect a valuation of about 30 to 40 million dollars. Well, whatever the valuation of this company is at, right? Well, 25 billion or 23 billion, depending on the price of the stock at any given moment, it is trading at 77 times negative earnings. So, it shows you fundamentally just how bad it is. Now, people have said, and there's a lot of hatred out there, and even some people have, thrown hate at me in comments and said, oh, you're clueless, or you don't know what you're talking about, or you don't give GameStop enough credit. Like I said, I give them credit. It's a dime business model. They don't have anything new and spectacular that is worth $25 billion. And that would be the stock trading, at, Tesla, prices at 1,800 times earnings. So what you have to say to yourself is, why would I invest my hard-earned money into this stock? So a lot of these stocks, everybody's heard about the chat boards on Reddit. Well, this is what sparked all this. So this is where these stocks started coming from and started getting this hype. So you now have government agencies and financial people and, hedge funds and, people have suffered huge losses, billions and billions of dollars of huge losses. So what people don't understand is that this is real money at play. So while it may be funny or fun and games when you hear about Citadel and Citron trade, all these hedge funds and middle people and market makers losing billions of dollars, you know what? They've made billions of dollars. They have billions of dollars to lose. But what you're not hearing about is the small people where, while it sounds like a joke, and we're going to talk about Robinhood in a little bit, who basically in a matter of one day, this was the hottest app for financial trading on the App Store. And in one single day, they destroyed their entire image. Imagine you're the best of the best, just growing, ready for an IPO, and in one single day, destroy your entire business. Now, I think Robinhood will come back, but it's going to take a long time, and it's going to take a lot of time for them to build up trust with their customers again. Because if I was trading with Robinhood right now, I would be sick to my stomach for the damages that they have caused me, and that's why lawsuits are going to be flying. But what people don't understand is, while lawsuits are great, and you know what? We may recover every dollar ever lost by using Robinhood, but that's 5 or 10 years down the road. That doesn't do us any good if we have to feed our family today. And that's what a lot of these people aren't understanding and grasping in all this. So what happened here basically is you have this Reddit group, they call it the memes, that came out and they didn't have any fake information. So what is different on this than a normal pump and dump is this was just a simple stock squeeze. There was no false information. All they said was, this stock is highly shorted. Let's start buying it and let's see what it does. Well, they came in, they started buying it, a week or two ago. And as you can see from the chart, if we look at the last 30 days here, hopefully this will load. All right, there we go. 1 month chart. So if we look at the 1 month chart, they came in. Oh, God, actually look at well, unfortunately, CNBC is not being cooperative. There it is. All right. So if we look at the chart, you can see here. This is showing. Sorry about this. Technical difficulties. I know what we're looking at now. All right. 1 month. There we go. All right. So if we look at the 1 month chart here, you can see, like I said, it started going up around the January 12th, so about a couple of weeks ago. And then it just started creeping up in the 40s and stuff. And what probably happened is all these people who were short the stock started shorting it more. And then that's when the last 5 days, starting Monday, this thing was just a rocket ship. So what happened was you have all these big people. You have this forum that had 2 million people on it at the time, which is now has over 6 million people on it. And they said to themselves, there's a short, the stock is over shorted. And I understand why the stock was over shorted, because fundamentally the markets usually run off of fundamentals. That's why when we have really good news about a vaccination, we've seen the markets go up. If we have bad news about COVID or vaccinations, we've seen the market go down. And that's why you've heard about the reopening trades and all these things. These are called fundamentals. And this is why for today's show, I have my special shirt on, the see no evil, hear no evil, speak no evil, because this is what has happened with GameStop. Basically, you have this stock that now all these people said it's a short, nothing wrong, nothing illegal done. The Congress is going to probably hold hearings for months on this and has no clue what is going on with this. You have, so all these people said there's a short. So they started buying the stock and it started going up slowly, but there wasn't a huge momentum yet. But it doubled that first week from, this 18, 20 bucks to 35, 40 bucks before it exploded on Monday. Well, these hedge funds who short these stocks didn't probably know what was really going on and just said, oh my God, there's a bunch of idiots out there. They're taking a stock that we already shorted all the way down to here. We've made a lot of money on, and they are buying it. They were, that first week, these guys were, last weekend, they were probably laughing all the way to the bank because they probably shorted another 20, 30% and said, you know what? This is insane. These people, do they know something we don't know? No, they don't, because we are intelligent investors who follow stocks, and we have people at GameStop we talk to. We talk to these companies. We write research reports. We actually know what we're doing, and we're sophisticated investors. Well, that is what the truth is, and it makes sense from a business standpoint. But nobody's ever seen the mob mentality, and that is what is fueling this. It's the same thing with Bitcoin. Bitcoin explodes because you have a bunch of people who believe in fairy dust, and while we do own Bitcoin and while we're playing it, but it is fairy dust. It is backed by nothing. Basically, you could say the same thing about GameStop. At least GameStop's publicly traded, and it has actual cash, and you have financial institutions with the money in it, and which is now is what's happening with cryptocurrency. But it's basically a fairy dust company. It has nothing going on. Even if we said, you know what, they've got a few ideas that look good, they don't have any idea that is worth $25 billion. And that is their valuation on the close of business on Friday. And that is where all this activity is happening. So basically, you have this short squeeze. Now you have all these people who are there was nothing illegal done. It's not illegal to short stocks, and it's not illegal to publicly say this stock is shorted, way overvalued. Let's run it up. All of us will jump in, buy it, and this will be bigger and bigger. And that's what they did. Nothing was wrong. Nobody said, like I said, GameStop has an electric vehicle. GameStop's going to be acquired for $500 a share. Nobody did anything wrong. Then all hell broke loose on Monday and Tuesday. And then you had these stock firms. Then you had these companies who actually started losing billions and billions of dollars. And they can't handle those kinds of losses. Well, they can, but they weren't expecting it. And then what they did is they started shorting it more and more. And they kept shorting it. And you just keep shorting it more and more until there's no return. Now, I'm going to show you something because I shorted it. And it's pretty interesting. So this is one of the photos from me shorting the stock that you can see. And if you wanted to short GameStop, they were charging you what I would consider illegal interest rates. And I'll explain about why all these problems have happened and how this all works. But the borrowing rate was 71% interest. So if I wanted to short 10,000 shares of stock, they wanted to charge me $1,500 a day and that was just based on, this was when the stock was 90 or like $100 a share. That's the interest rate they were charging per day. Okay, I thought in America, and I think I've been told different states have different rules, but I thought Colorado had a 36% max interest rate. They're called usury. I don't know the exact word, but it's like usury interest rate. It's to protect people, because otherwise credit cards would all just charge 100% interest and America would be bankrupt. So this is what Charles Schwab did. They're charging 71% interest. It's absurd. I mean, to me, that is a crime. And it's not just Charles Schwab. All the brokerage houses raise their interest rates and stuff. It's just insane. So now you have all these people getting greedy. Everyone's trying to make money off of this. All hell's breaking loose. And boom, Robinhood. We're not trading it. Well, it's funny how Robinhood, one of Robinhood's main financial owners, is Citadel. Well, Citadel is one of the people who was losing their shirt in the short. Now, like I said, we're not going to know answers for many years to come, but there's all these people who have all these theories. I have a theory, and I honestly don't think it was any like Citadels and Citrons and all these clearinghouses calling and saying, do this or do that. The truth of it is companies like Robinhood had too much growth too fast. They were these online systems that were basically set up that you just hit the market, flood it really quickly, and let's get 1 million users, and they weren't prepared for this. And then when you buy stocks, you have something called margin. Well, normally on most stocks until this week, you have 50%. They were 50% marginable. So for example, and this is why I've always said, if you've been watching some of my previous shows, when the market is on fire, the penny stocks do good, or the lower end stocks, because people have money. When the real stocks, your Dow 500, your S&P, or excuse me, Dow 100, S&P 500, when those stocks are doing bad, your lower end penny stocks do bad because they suffer. And the reason for this is because of margin. So for example, let's say I owned just to make this simple, I own one share of Tesla at $800 a share. Okay, at 800, one share, it's $800. I only need $400 to buy that stock. Now, if Tesla goes to $1,000 a share, I now have in my bank account an extra $100 to buy something with, because I only need 50% margin requirement. So as Tesla goes up and I have $200 in profit on that one share of stock, I have basically $200 that's given to me, 100 of it that is available for me to use to buy more. So if I, now it doesn't sound like a lot, $100, but let's say I had $1 million in play. Let's say we had $1 million of Tesla and we bought it at $800 a share, which equaled $800,000. Tesla goes up to $1,000 a share. Now I have $1 million. I would have $100,000 to play with. So I say, you know what? I'm making money. Tesla's doing great. The market's doing great. You know what? Somebody just told me about this stock, pickle juice, or whatever. It's PICK. All they do is they make pickle juice, but they pasteurize it using cows. Just some crazy story you've never heard of. The most insane thing you've ever heard of. But you go, God, and it's only 1 penny a share or 10 cents a share. And you're hearing this thing's going to $1 because they're about to get bought out by Coca-Cola because there's a big run on pickle juice that's pasteurized. Oh my God, let's buy it. And this pickle juice stock, everybody starts buying it at, 10 cents, and it's now 20 cents, and it's now 30 cents. And if I'm smart, I sell and I make my dime or 20 cents and I get the hell out of it. But then all of a sudden, tomorrow, Tesla comes out, they miss earnings. It was $1,000 a share and it drops to $600 a share. All of a sudden, oh my God. And your brokerage firm is sending you this thing called a margin call. Well, a margin call, you didn't have any problems. Everything was great, but you took that extra $100,000, put it into a bunch of crap, or maybe it's good stuff. I don't know. But you put it into a bunch of stuff that was probably more speculative because you started getting greedy and you were gambling and making money and happy. and all of a sudden Tesla drops to $600. So when you went from having this extra $100,000 to play with, now your brokerage firm's calling you up saying, hey, you need to deposit $100,000 immediately or sell your position or sell some shares to get it down. Well, then what happens is people panic or they get these margin calls and they don't have any money in the bank. So two things happen. They go, you know what? I got $100,000 worth of this pickle juice stock at 30 cents, but now it's 20 cents because the whole market's collapsing and everybody's panicking. And then by the time everyone gets out of the pickle juice, it's back down to a penny. Kind of like the same thing you just saw with Dogecoin the other day. This thing was 1 penny. It went all the way to 7 cents, and now it's back down to around 2 or 3 cents a share. So if you were the guy on earlier in the week who heard about it and got in at 6 or 7 cents, and you're looking at your portfolio today and you had $1,000 into this thing, you're now down 2/3 almost of your money. Well, if you made $1 million on GameStop, losing 2/3 on this, if you only had a couple of $1,000 in it, isn't too bad. But if you didn't make any money on GameStop, or you were just a person trying to pick up on what the next hot thing was going to be, you're now really down. So now you're going to probably make even more high-risk bets trying to chase your losses. It's kind of like people who gamble playing card games, or, you know what, I think the best one is probably roulette. Everybody says, let's say we put $100 on red. We lose the bet. Then we go 200. We lose the bet. Then we go 300. We lose the bet. Then we go 600, we lose the bet. Then we have to go, 1,200, or something. Then we go, you just keep chasing it because you say there's no way it's going to keep going, black every spin. Well, it can go, it's 50-50 chance. Every single spin, well, it's actually not even 50-50 chance because of the green, but every spin is a new spin. So it's irrelevant. There's nothing that says after 27 spins, it has to go back to red. I mean, the odds of 10 spins on black and never hitting red are very, very odd, very rare. But if you don't have the bankroll to back it up and account for, keep pressing your bet and making up for all your bets. But do you want to risk $10,000 on spin number 10, chasing that $100 bet on spin number 1? Well, it's the same thing with these markets. So these stocks got all out of whack. The big stocks start crashing. People get margin calls. They start selling this. Then it also hurts the larger stocks because now you have all these margin calls and people start selling their positions in those because now they're pickle juice stock they never made any money on. They actually may have lost money on it, but they got out of it. Now they, have to sell, if you have $1 million, you have to sell, $100,000 of Tesla off to cover this margin call. And then that's more people selling it. And it just keeps going and going and going. And especially when you have a lot of unsophisticated investors who are highly leveraged, that is what happens. So this is what happened with Robinhood. Most brokerage firms have a lot more cash on hand. Robinhood does not have a lot of cash on hand. Well, they did have a lot of cash on hand. But here's what happened. Everyone and their mother said, Robinhood, Robinhood, Robinhood. Go sign up at Robinhood. It's the best. It's instant approval. Send in your money. You'll be trading in minutes, and all this stuff. Well, everything was working fine. And then what happened is Robinhood took in so many new customers, and then these people started buying stock on margin. They don't have that amount of money. So it wasn't anything that Robinhood's going bankrupt or anything like that. But somebody has to put up that 50% margin for you to buy stock. Now, to make this simple, let's say 1 million new people signed up with Robinhood in the month of January, which is probably a pretty accurate number, maybe even more than 1 million people. But let's just say it was 1 million people. If every single person opened an account with Robinhood with $1 only, okay, then Robinhood would have $1 million in new deposits. Well, then but if everybody went out and bought stock on margin, they would need a matching $1 million for the margin. Now, while they're charging great interest rates on your margin, so they're making money on that, they still need that money. And this is just a very simple example, but let's say they took on this week, this month, 1 million new accounts at $100 each or $1,000 each. And that number is, $10 billion of new business. They need $10 billion of margin to make that business work. Well, they panic, and then you have stuff going up and down. And the other thing with margin is, like I said, you have these margin calls. So if you're the guy and let's say you're playing GameStop before they made them 100% non-marginable or 100% cash requirement stocks, you're the guy playing GameStop, You have $1 million in your account. You come into GameStop. It's $500 a share. You're the one who bought it at the peak. You have 2,000 shares at, some of my math are 20,000 shares at $500 for $1 million. I think that's correct. I don't know. I don't know, whatever the math. But if you bought it at 500 and basically it went down to 250, you would have a 50% margin call. Well, these people can't make it, so then they're liquidating accounts. They're trying to get out of this. But some of these stocks fall, and you actually are in the negative. If you bought it in 1 day's time, and this went from 500 all the way down to $112, 250 would be the break even at 50% margin. So if you bought at 500 and it hit 250, your whole account is wiped out, and they could still, if they liquidated you right there was no loss to them. Well, if they didn't catch it in time and all of a sudden the stock's $150, now the brokerage firm has lost 20 or 30% of the investment. They have to cover it to the trading house. And this is where the big issues happen, because the trading houses started to up their requirements on how much they were charging. So you have just this cluster, just this mess of everything going on in the markets. And this is what caused it. So it wasn't that, somebody was working sideline deals. These brokerage firms didn't have the money on hand. Well, some of the smaller ones for sure, to secure these financial investments. And then the issue is you put in $1 million, you just got wiped out now because you bought at 500, it's 250. They sell you out at 250, so you're wiped out. At least you don't owe them any money, let's say. But now you have no more money to be in the market. And then it goes back to 400, and now you're pissed because you could at least got some of your money back. Or like I said, they said, you know what, hurry up, make a margin call, send us money. You didn't, and now it goes to $200. Now you owe them money. So now they're stuck suing you for their money. You have no more money left, And like I said, that's a guy with $1 million. Let's take the guy with $5,000. This was his life savings. They're not going to ever collect that money. And he's going to argue, why did you sell me out? I knew it was going to come back to 500, or $400. Okay. Well, what if it went all the way back to $20? You would owe us a lot more money than what you owe us right now. We have the right to mitigate our damages. Now, the other big thing with all this too is with the brokerage houses, when you sign up, you sign something called an arbitration clause. Arbitration clauses are good and they're bad. You're not going in front of a judge. A lot of arbitrators may have been judges. A lot of them are usually attorneys or industry-related people. When you get an industry-related arbitrator, they're usually on the favor of the business, not the little guy. And that's why the government's going to step in. But still, the government, the trading firms have every right to sell your positions out. The issue that I saw starting then, they started not allowing people to trade options. They started not allowing people to short stocks. They started not allowing people to sell naked puts. You can't allow somebody to make a trade on one day and then the next day change the rules if they do actually have the money to cover it. Selling a naked put, you're only responsible for the amount of the money from the price of the stock all the way down to zero. There's no capped loss. Shorting a stock, it's the same thing. Shorting a stock, you have an unlimited loss, because let's say you shorted GameStop at $100 and it goes to 500, you've lost 400% or 5x your money. So that's where it's hard. How do you short a stock and they're charging that 71% interest that I showed you? How do you short a stock and let's say GameStop goes to $1,000? These firms have a lot of risks. So covering that risk or not allowing you to short stocks makes sense, because there's no amount of money, because it's unlimited how much you could lose. I mean, if GameStop went to $10,000 a share and you shorted it at $100 and they're like, yeah, no problem, just let it keep going. When do you want to send your margin call in? And like I said, let's say you shorted only one share of stock at $100 and it's now $10,000. That $100 is now a $9,900 loss. It was insane, these movements that we saw. So now the other big joke with Robinhood was, they said, all right, we're going to allow trading again, and we're going to allow you to do 5 shares of stock at a time. And I was saying to myself, 5 shares. I'm like, that's crazy. And then they said, well, hey, we're changing it because the volatility is still to 1 share of stock. Even if the stock was to move 10 or 20%, I don't know who would sit around for 1 share of GameStop and try and day trade it, or what they would do with it. So let's say you bought 1 share for $350 if, because normally to play a strategy of, buying and selling, or if you're going to day trade, sometimes you have to average down. If the stock's going down, if the stock's going up, you average up. You just makes common sense. Well, when these stocks, if you can only buy one share and let's say you paid $350 for it and it goes to 340, you're stuck. All right. Now what do I do? It goes to 300. Now what do I do? But if I had $10,000 in my account, why can't I buy another share at 300? And then the share I have at 350, now I have an average price of 325. I have a lot better shot of getting my money back. Now it goes to 200. I can't buy another share. So they basically have changed the rules and shut people off at the kneecaps to make money. Plus, I honestly don't think anyone's going to make any money off of 5 shares anyways of any stock. So it's just crazy what happened. Now, you know what? If you haven't subscribed yet to me, make sure you click the subscribe button if you're watching on YouTube and the gray bell so you get notifications, because we're a live daily show, normally Sunday through Friday, but this is a special Saturday edition because so many people had questions about GameStop for me. And if you're watching on Facebook, make sure you follow me and click that little thumb up for the like button so that you get notifications. But back to GameStop. So this is another problem, and this is the fundamentals, and I'm going to share this with you, and this is what I was saying. This is a huge problem. Where is GameStop going to make money? One of the most popular selling items, obviously, is the PlayStation 5 and also the Xbox. So I want to show you this. And this is what I always do when I'm doing my research on Apple. I say, how long is the wait to buy Apple? If I want to buy iPhones and stuff, how well is Apple doing? Because a lot of you guys know I play Apple very heavily. So when they have new products come out, I always check the store if I can buy that product. If I can't buy that product, I know Apple's going to do really good. And that's why I said they were going to have the best quarter they've ever had. But I also said when a stock runs up 14, 15, 18 points before earnings that week, it's also very dangerous because it's way overran, which obviously happened, and Apple came down, 12, 14 points from the high. But this is my point. So let's say GameStop was going to have this blowout earnings and they were going to actually turn it around and make a profit for the first time in, years. Well, like I said, they don't have anything to sell. If their biggest item, if they actually had 1 million PlayStations that they could sell and make $100 a PlayStation, they could do really well. So then I said, well, what about the Xbox? That's the other hot gaming console right now, right? Unavailable. So this is a huge problem, and this is what I was saying. How is GameStop ever going to turn around and make money if they don't have a product or inventory? They don't even have used ones. So even if because nobody sold them yet, or they're just selling them online on eBay and avoiding, or Craigslist, avoiding GameStop because you could just sell it and make the money. Why do you want GameStop to take $50 in profit? So this is where this is all going to be a huge, huge problem for the future, because you have all these, they don't have a product to sell. So back to my whole thing, GameStop is probably worth the 15 or 20 bucks it originally was, and it's not trading on any fundamentals. Where this all goes will be very, very interesting in the future. Now, Robinhood, like I said, in the matter of years of building up to this premier thing, the greatest online stock trading app ever, in a matter of minutes, in one day's time, they went to being the worst app, the most hated brokerage firm in the world. And like I said, some of it, maybe there is some inside doing, there is some stuff we don't know, but the honest truth was they didn't have the funds available. So they obviously were able to get $1 billion quick emergency loan and different stuff like that. But still, at the end of the day, these stocks, these companies, they need money. So now they've changed a lot of stocks to 100% margin requirement. But still, like I said, on something like GameStop, even if I said to you it's 100% margin requirement to buy the stock, and then the stock takes off or the stock comes down, it still doesn't cover it. At least if you have 100% in the stock and it comes down, they're covered. But if it goes up, so that's what they're doing. But unfortunately, it wasn't fast enough, and you just have so many shares out there. Then you have these, and the trading firms, which are the intermittent people who are making all the brokerage deals. They're the ones who have raised some of their requirements by tenfold to the brokerage houses. So a lot of people also ask, how does Robinhood and all these places not charge commission? Well, there's something called a bid and an ask. So they're just making the spread. So you're honestly, if they didn't have a bid and an ask, you would be much better paying $7.99, $10 commissions, because if you're trading a large volume of stock, you're paying a lot more than $8 in commission. If you're buying 1,000 shares of stock And let's say on, especially when the stocks are, trading in hundreds of dollars, when the stocks are penny stocks or low end, stuff for under $1 and they're trading very tight, it's not a big margin. But when you have a stock like GameStop, and it's trading at like $350.25 by $350.85, and you have 60 cents in the spread there, 60 cents in the spread, and you buy 100 shares of stock, they just made $60 off of that transaction with you. So the profits for them are massive, and that is why that's how they're doing it, and that's what they're all doing and how it's all working. So a lot of people are, because they keep asking, how do they do free trades? Well, it's very easy. That's how they do it. They're making a lot of money off of you by doing it. So hopefully this will be a very, very interesting week to come. I think you're going to see more people involved in it. Like I said, it's going to be just such an interesting week. The markets have never seen anything like this. I don't think anybody's doing anything illegal. They're going to be looking now to see if there's some big hedge funds, hedge funds, like I said, I'm going to change my trading mentality, because I used to trade based on fundamentals, earnings, how the market was looking, trends. Are we going to have good news about COVID? That's really good for these stocks. That's good for the market. Are we going to have a new stimulus package? That's really good for these stocks. That's really good for the market, or this or that. But now it doesn't matter, because it's now going to come down to, if Elon Musk, tweets a picture of Big Bird, is Petco stock going to run today, because is that a sign that Petco is going to get big into bird feed? Like I said, it's just a crazy market now, because we're not trading on fundamentals, and we have people who, like the Bitcoin players, they've never traded on the fundamentals, because they're just playing with an imaginary cryptocurrency. While it does exist and you can use it, but it fluctuates too much to be of any value in the short term for major companies to use. Long term, I think they're going to figure out stabilization, but just like India now saying they don't want to allow Bitcoin. What if India bans Bitcoin and they want to have a national cryptocurrency? Janet Yellen, she doesn't like Bitcoin. There's a lot of hurdles with it. So, like I said, we're buying $50,000 a month in Bitcoin. We're going to see where we wind up at the end of the year. The good news is there's millions and millions of people who believe in it, and it's going to probably keep going up. But you're going to see some huge fluctuations this week. My guess is Monday we'll probably see a new burst of new buyers and people, and all the people on the sidelines rallying their friends to come in here and buy GameStop, buy AMC, buy BlackBerry, buy all these stocks you've heard about, the short squeezes. And but the one thing people have to remember, and I've always said something, while I may be trading with $5 million and have a large account, you may be trading with a lot more than me and have a larger account, or you may be trading with a lot less. But there's a lot of people who are way financially bigger, like the hedge funds and these big people, who have a lot more money than any of us will ever dream of to play with in the market. And truly, if GameStop is $500 and they can actually find stocks somewhere too short, they are going to have the ability to really do some damage. And a lot of people could get seriously financially hurt in the marketplace. Whether that happens or not, or what happens, but that's how the markets work. And I can tell you right now, brokerage firms, the governments, and all these people, especially the government, while they may say they're for the little people and they don't want to see us get screwed, unfortunately, they don't move very fast. And even if they find that there was wrongdoing, it's years away before any of us will ever see a dollar from the wrongdoing. So we have to be very, very careful and play the markets correctly. With that being said, I still may play GameStop. I'm still playing BlackBerry. I still may play AMC. I'll still play high risk stuff. But like I said, I've adapted and changed to how I play this stuff. Now I'm where it used to be you buy on the rumor, sell on the news. Now you just buy on the rumor in the chat, and it just keeps going and going and going. So it's just been crazy. But hey, you guys have some questions, and also big shout out to all our YouTube sponsors who have access to those really cool emojis. And also, we're almost 100 Patreons in the first month. So if you guys don't know what Patreon is, that's our private Patreon group where I post all my trades in real time. And for the month, we're up almost $800,000. So not too bad. And even this week, with all this chaoticness, I still made 160 grand in the marketplace. One point I was up another 600 grand or 600 grand, but we gave a little back Thursday. So we still did great in the marketplace. But if you would like to join our Patreon group, you just go to patreon.com/Raja Makes Money. And I post all my trades in real time, as well as we have a private Facebook group where people are now posting about the stocks they like and different things. I'm hearing a lot of chatter about Naked this week and AKD. Maybe I'll buy some of that on Monday on the open. And we'll see how it all plays out and stuff. But you guys, any questions about GameStop, how this all went down? Let me take a look here. And if GameStop issues more shares, that will dilute the value of the current shares, so it should make the stock drop. And that's very true. That's what AMC did. Unfortunately, AMC, when they raised $900 million, sold off a lot of their shares. But my guess is if GameStop was doing that, they've already done that in the marketplace, what they had available. But it'll definitely be interesting when we see a lot of these 10Ks get filed by the companies. Jory, $5 super chat. You're awesome. Thank you so much, Jory. Chaos, $2 super chat. Thank you for explaining. You're the best. Very welcome. Thank you so much. Parth, $2 super chat. Should we worry about Robinhood going bankrupt? No, I don't think Robinhood would go bankrupt. And even if Robinhood was going to be bankrupt, somebody else would step in and take them over. Plus, just like banks, trading firms are SEC or FEC. Which not SEC, FTC insured up to certain amounts of money and different stuff. And I can tell you right now, the government is going to step in and not allow everything to get, to go bankrupt or anything. But one thing with these markets and everything like this to keep in mind, it's actually a good thing because it's gotten so many more people involved in the marketplace than there was before. So, I mean, so many people who never thought about trading in the market are now trading in it. So there you go. Jake says FDIC. Couldn't think of the way. Sorry about that. Beach Scratcher. Webull is way better than Robinhood. I 100% agree. And also, guys, if you guys haven't checked out, we have the Webull Challenge. It starts on Monday. There's our links. I just posted them again. If you guys haven't signed up for Webull yet, there's a link. Go sign up for an account. The Webull Challenge, what we're doing is for bragging rights, who the greatest trader is, who can start with $100 in their account. And whoever can turn 100 into the most in the month of February. Even if you sign up today, your account probably won't start until like February 3rd. That's okay. You have all month to see who the best trader is. You also get 4 free shares just for signing up with Webull. So, and that counts towards the $100 total. So you could start out with, anywhere from $20, $30 to $1,800 because you can get a share of, some large companies out there up to $1,800 they're offering. So I haven't seen anybody get the $1,800 share, but it is possible. But yeah, take advantage of it, guys. You can't add any more money to your account during the month to be in the contest because we just want to see who the best trader is out there. But you can start the contest on the 26th day of the month, and you may win it. Everyone else may have lost all their $100, and you're the last guy standing, and you'll have bragging rights. But every week you'll update us, let us know. The link also I just posted has where you do sign up to be in the contest. Let us know that you have your Webull account ready to go. If you already have a Webull account and it has 10 grand in it, unfortunately, you're not going to qualify for this time with us with it and stuff. So Omar says, dog coins are good to buy right now. If you're talking about the Dodge coin, or I'm not sure what dog is, but if you're talking about Dodge coins, I would stay away from it. I think that ship has sailed. There's one of our YouTube sponsors has access to those really cool emojis. Boom, chicka boom. We want the chicken. Hey, we had a winning week this week. We got the chicken winner, chicken dinner, and I think I'm hoping for a big Monday this week. And I think we're gonna see it's a new record by the end of the week. Definitely be way over $1 million in profit to start the year off with. So it should be good. So it says, Raja, you should make a trading app. I already got the big jackpot slot app, so one app's enough for now. Everybody's saying maybe one day I'll have a hedge fund one day. Who knows? Never know where this could go. So it says, question: what do you think shorting AMC? So as you guys know, I sold puts to open, the $5 ones. It was one of my trades this week that did good, made us about $25,000. I don't even know if if you can find stock to short, I think it's great. The problem with the shorting the stock, and tomorrow I'm going to talk about how I made money shorting. I'm one of the few people who made money shorting GameStop actually early on in the week. But at one point, I was down over $1 million, and I'm going to show that too. So it's high risk. I mean, you could lose your shirt. And I also almost bought 20,000 shares at $90, and I could have made $2 million in a day, but unfortunately, I didn't do that. I didn't go with my gut, but it's crazy. So back to but here's the thing. I like playing the puts to acquire if you can get if your brokerage firm is allowing them, because I think that gives you a lot less liability. It also caps your margin requirements. And that's the other thing. If you short AMC, even at $13 or $15 a share, they're probably going to require you to put up $45 a share. And honestly, I don't even know and that's why I don't think a lot of firms are allowing it, because if AMC all of a sudden went to $300, just like GameStop, I mean, it's a disaster. So if you think GameStop's going to go down, either buy some puts on it and pay that premium, or just, sell the puts to open up the $10 contract for $2 or something and let it come down and make your money that way. I think that's the only real way you can to play those and stuff. Jake says, I bought Ox HBTC in support of Wozniak, but took a kick in the nuts, turned me $100 into 20 trying to get out because of a drop. So no more anything other than Coinbase for me. What do you think of AAL? Is that American Airlines? Or off of the top of my head, I don't know. Let's check it real. AAL. American Airlines. So that was another one that was a short squeeze play, and it's the same thing. They just came out and United said they're going to lay off 14, or they sent out notices. These airlines are suffering. There's I've been flying. There's some weeks are very busy on the weekends, and other times it's they're empty. Going to Vegas is empty. Vegas is going to be, obviously they'll be busy for the Super Bowl. They're busy on the weekends because people are getting out of California and different stuff. But during the week, without convention center business and different stuff like that, they're dead. And even with vaccinations and stuff, but you still have all these restrictions. Now you have Canada banning all these travel to the Caribbean. American Airlines is really heavy in the Caribbean and also international flights. These companies are all losing money. So, outside of telling you, do you want to buy a stock? And here's American Airlines. Earnings per share, $18. Down. For every share that they own, they're losing $18. So, who wants to own a stock for $18 that's actually worth negative $18? Not me. So, but I don't know. Like I said, some of this stuff is just not trading based on how it should be and stuff. Jason says American Airlines is still pretty high. I bought it at $9.58 a long time ago. Sold when it was 14. Something issues with COVID and problems with Boeing. I don't see an increase. Let's see. You think CCIV will rocket ship after merge? That stock, I've been watching it. The one Monday, it was all the way up to 37. I was like, I knew I should have played it. Then it was down. I actually looked at the puts to open on that one, like the 15s at like $2 we could have made, but they were only monthlies. So, a lot of the market makers now aren't making, they're not making options on the weeklies. They're doing them just on monthly, or they're also not adding higher puts or calls. So, because they don't want to cover the risk. And that's another problem, is you're going to see a lot of these people getting out of, making markets in some of this. And then you have the volatility in the VIX all the way up, 37% up, 17 more percent this week. So all these premiums which is great on what I'm doing, like on Apple and some of those, because the premiums are better, but it just makes it tough. You could have where normally every day, let's say Apple, let's say you wrote a call or a put on Apple and it was the 120 and Apple's 130. Well, every day, Monday, and Apple stayed at 130 all week. Every day, that's going to go down 20 cents a day until it expires on Friday at 0. Well, when the VIX goes up 17%, this dollar that should have went to 80 cents today because Apple stayed at the same price actually is at 97 cents. It only drops 3 cents because of the volatility keeps going up. So it's very interesting on those. Jake says the other short squeeze may be the cruise industry. I've said that forever, but people keep talking, reopening. The cruise industry has lost their, asses, to be honest. They're still not going to be sailing until maybe April or May at the earliest. And then they're going to start sailing at 25% capacity. It's not like they're going to start, sailing at 100% full boats. I think people will come back really quick to sail, but it's not going to be the same. Buffets are going to have to be all self. Imagine 4,000 people on a boat, and they have to try and serve us the buffet every day. And like I said, and do you want to be in the Caribbean on a boat all day long wearing a mask? And it's going to be different. Fingers crossed these vaccinations really work. Here in America, things are starting to come down for sure. Here in Colorado, they've came down a lot, but it's going to be rough. Florida has suffered so heavily, the hotel industry, by all the ports and all those hotels. Alaska, if there is no boats again, I don't know if Alaska's, tourist industry could survive another summer without, cruises and all those, ports and stuff. So definitely be interesting. Mark says, Raja, what's your opinion on Golden Nugget Online Gaming? It's been weak lately since completing its SPAC, but with so few in casinos, online should be strong, I believe. So I definitely think, the casino play is not the actual casinos. There's no way anybody could tell me that the brick and mortar casinos in Las Vegas are making a profit. If you tell me that, you're full of it. You're clueless, because they're not. You can't make money in those buildings being open 2 days a week or being at 25% occupancy. So that's definitely not it. But the big play is obviously the online portion of it. The one thing to remember is there's just not that many states really with it yet. So yes, over time and in the future, I think those are going to be big, really big. But until that point in time, there's not that many states with it. The other problem is if you look at the acquisition costs of like BetMGM and DraftKings, they're spending $500 to $1,000 to acquire a new customer. Well, you have your cost of acquisition, it's called. But what is a new customer worth? Is it worth $500, $1,000 to get a new customer? If he spends $50,000 a year, it's a great investment. It's no different than a casino giving you $500 in free play, 2 free nights, $300 food credit, and you go to the casino and don't spend $1 and just use the free play, use the food credit, stay in the room for 2 days, and they just lost $1,000 on you. Or you go to the casino, you lose $10,000. They spent $1,000 on these perks for you. It was a great investment. So definitely works. Raja, are you concerned about correction coming? So I don't think we're going to see a correction. I think we could see some dips and stuff. But these, like I said, the stocks that trade on fundamentals are doing great. They, have all-time high profits. They're going to continue. Apple's not going anywhere. I think you'll see corrections maybe in something like Tesla and some of those that are way overvalued. But I think your stocks that are trading at, P&Es of between, 30 and, 36, 40 are going to be pretty solid that have stories to tell. The stuff that's out of whack, yes, it could be a correction. But you also have to remember, the government's, if they approve this new stimulus package and they give every American $1,400 more, that's just a lot of money. They're flooding the economy with money, so one day it's all going to crash, but you just don't know when that day will be. So it's definitely crazy. Anthony, I bought a long-term puts in XRT, big exposure to GME stock. It's a retail ETF. I think it will eventually crash with GameStop. So not familiar with that one, but yeah, mark my words. And just like Signal, do you guys remember Signal? Yeah, we'll pull that one up real quick. Remember I said to you guys, if there was one stock to short, it would be Signal. This was a couple of weeks ago. Pulling it up. So this is the one. Remember Elon Musk tweeted about Signal, the app. Well, here's Signal, the stock. It went all the way from 50 cents to $70, $70.85, and finally it's back to $5. I even remember that one of the days I was like, and we tried to short it, and there was no stock available, and it's the same thing because I said the stock. It was a screw up, and then we're like, I was like, oh, it's got to be, it's going to go back to $5 the next day, and then it was like 35, then it bounced to 38, and had a little support. I'm like, because some people don't get the news in time, but I feel bad. Imagine you're the grandpa who your grandson was like, hey grandpa, Elon Musk just tweeted Signal, SIGL, which he didn't. He just said something about Signal, the app, or whatever he's talking about, but you got confused. It's the same thing that happened. There was a stock in Australia that took off because they thought it was like GMED or GMEX, I don't know, something like that. And I've seen it a lot. I think a lot of people with Zoom and also like ZOM, ZOM, and some of those ones have benefited off of typos and people who just aren't paying attention. But imagine, hey grandpa, Elon Musk has said signal is just really good. And you're, this old man with his life savings calls his broker. Hey, get me 1,000 shares. What's the price? $70, sir. All right, you get it. And now he's calling his grandson and says, you know what? I had this really nice inheritance for you, but my 1,000 shares that I paid 70 grand for are now worth $5,000. And that's why people have to use intelligence. People are going to get hurt. I can tell you at the end of the day, even if GameStop goes to $1,000 first before it comes back down to $50 or $20, somebody is going to get hurt. And people have gotten hurt so far. I mean, even the Raja with my account size and all the changes, I've gotten hurt because it had my hands tied and making trades that I wanted to do and stuff. But, people are going to get hurt. Margaret says, I don't think Signal and GME are comparable. Well, they are and they aren't. Obviously, GME is a group of people, saying buy a stock, let's do a short squeeze. Signal was somebody who tweeted, the wrong information, but they are related to each other, not anything that they even do with each other, but they are related in the fact where something that can run up very, very fast, and you're the guy who buys at the peak, and then it comes down. Who watching was one of the people who bought Bitcoin when it hit $43,000 because you thought it was going to 50,000, 2 weeks ago. And then when it came to, 3 weeks ago, a month ago, whatever it was. And then when it came down to 31,000, a few days later, how did you panic? It's the same thing. If you're the person who buys at the top on these volatility, you can get hurt. Is what I'm trying to say, Margaret. So hopefully that makes sense to you. But hey, guys, thank you so much for watching. This was a special Saturday edition. We'll be back tomorrow. I'm going to tell you guys how I made $300,000 shorting GameStop. So I think you're going to want to hear and see how I did it, even when it was hard to get stock and paying ridiculous interest rates, up to 71% that Schwab was trying to charge. But I did it. I made money on Monday shorting GameStop. At one point in the day, I was down over $1 million even. So I'm going to talk about it. We'll tell you how I did it, show you guys, and be pretty exciting. We'll also talk about the week ahead. We're going to talk about Apple, talk about BlackBerry, some of the other stocks I'm looking at, maybe talk about Naked if I get into that one this week, and the other stuff in our portfolio. But I hope all you guys enjoy your Saturday night. If you haven't subscribed yet, click that subscribe button, the gray notification bell on YouTube. If you're watching on Facebook, click the follow button and the like button, little like thumb up, so that you get notifications when we go live. Also, please make sure you share this video, tell your friends about us, let them know about Raja Makes Money. And we're up for the year almost $800,000. So it's been a successful start of our first month. We're on our goal to 15, 20, 25 million. Also, don't forget the We Bull contest. And if you haven't signed up yet, make sure you do right away. There's the links and the directions. Big shout out to all our Patreon members, almost 100 Patreon members our first month. So you guys get access to all my real-time trades. But hey guys, thank you so much for joining us on this Saturday night. And I hope you guys have a great rest of your weekend and see everyone tomorrow night, 5 o'clock.